Hi everyone, welcome to my video on how to analyze Tesla as a company. So in this video, what we're essentially going to do is we're just going to look at Tesla, how well it operates, what is its financials. Essentially what we're going to do is kind of separate the hype from the company, look at the company for what it actually is, how well it is managed, and what its financials are. We're also going to look at how the stock is performing, and eventually let's try and explore if the stock is a good buy currently or do you have to wait? What is the future growth potential of the company? So to start with, I have already written up my blog, and I will be using my blog as a guide. What I've also done is opened up the 10K and the 10Q for the company. And we'll use, and these have been the 10K and the 10Q is what I've used to analyze the company. So if you want to find where to get my blog, you can go to lifestyleandcoffee.com. What you can do is go to investing, and within investing, you can go and click is Tesla a good stock to buy currently, and that's where you will find my blog. So without wasting any time, let's get started. So just to give a quick background on Tesla, Tesla is a company that is so purely dedicated towards the manufacture and storage of energy, right? So it has two operations. That is, one is EV, electric vehicles, and the second one being energy storage and generation. So as I've said, the first one is the automotive sector. Within the automotive sector, the sources of revenues are sales, service, insurance, and charging networks. And within energy generation storage, they have the products such as Powerwall and Megapack. Recently, you must have seen Tesla built this huge energy storage facility in Australia, and that's something they're trying to boost, where they're also trying to boost energy storage and generation. You've probably also seen Tesla solar tops for homes. So that's also something Tesla is also focusing on. Um, Within automotive, just to give you a perspective, Tesla sold about close to 1 million cars in 2021. To be more precise, it's 936,222. All right. And just to give a breakup of where Tesla gets its revenues from. So it's about 5% from energy generation and storage, and about 95% from automotive service and others. So for all practical purposes for this analysis, let's consider Tesla as an automotive company in terms of comparison with other companies. So so before we go ahead, just to give you an idea of where to find the 10K and 10Q. So if you go to Tesla Investor Relations, uh, as of now, as of making the video, the latest statement we had was the 10Q. That was as of March 31st, 2022. And obviously we have the 10K, which is the annual report. Um, so for the balance sheet, as you know, balance sheet is a snapshot of where the company is right now. We will use the 10Q, but for all other annual metrics like the cash flow statements, the statements of profit and loss, we will use the 10K. All right, so back to the blog. So, so yeah, as I told, 95% automotive service we are going to consider this as an automotive company for now, and let's see where Tesla actually makes its money from. So as you see here, it makes about 44% of its revenue from the United States, and about 26% from China. obviously China is one of the biggest EV markets in the world, and it's no surprise that Tesla makes a huge chunk of its revenue from China. Some of the other markets would be Canada, Germany, some parts of Europe, UK, and Australia. So that's where it gets 30% of its revenue from. And obviously, I just mentioned just a few countries. Probably there are a lot more. I need to explore that. But just for practical purposes, US is the biggest market. The next biggest being China. So how is the stock grown since its IPO? So Tesla had its IPO in 2010, and it had a very it didn't and the stock didn't really didn't grow much. As you've seen, it's been fairly flat till 2019, and 2020 was when it really shot up. I've written another article on my website on how fast Tesla grew between 2020 and 2021, and if I understand, I would say it grew by about 10 times, but just check my blog for it. You'll get more details. But it has since dropped as of making the video, not by much. But whatever said and done, this has been a fairly rapid rise in the last 2 years. This particular uh, graph has been adjusted for stock splits. So just to give you an idea of what Tesla's balance sheets look like. So let's just go to the 10Q. Before I go, I just wanted to make an announcement. So I have tried and kept this video fairly raw. I don't want to make it an overly edited video. I just want to walk you through where you'll find all the specific data rather than present it to you quickly. So if you go to the 10Q, and if you go to consolidated balance sheets, there you go. So as you see, total assets for Tesla as of March 31st was about 66 billion, right? And total liabilities being about 30.6 billion, and total equity was about 34 billion. So that kind of gives you an idea of how big Tesla is in terms of assets, right? Obviously, the capital structure of the company tells you what the company is about at that point of time, right? Everything else is either annual or a quarterly metric. So going back to the blog again, now what does this mean when I say 66 billion in assets, 30.6 billion in equity, sorry, liabilities? So I'm just going to put that in perspective. So what I've done is I've kind of made a chart here, and I've kind of, okay, what does it mean? Like, how does Tesla compare with other big companies, right? So as you see, this is where it stands. Stellantis is the next biggest, and obviously as you go, GM, Toyota, and Volkswagen Group. I've probably made a mistake here. This is not GM, this is Ford, and I will make that correction. So while we are in assets, let's go look at working capital. So what is working capital? Working capital is basically it's the difference between the short-term assets and the short-term liabilities. What it tells us is in the short term, basically it's a difference between current assets and current liabilities. And so let's just go to current assets, right? So if you go to total assets, which is 66 billion, if you see there's a line called current assets. Current assets are assets that are in the short term, right? Any assets that can be quickly converted in the short term. And basically it's cash and cash equivalents, marketable securities, accounts receivable, inventory, and any prepaid expenses in Tesla's case. And the same goes to current liabilities. So what does the company owe in the short term, which comes out to about 21.45 billion. right? So what you understand here essentially is, in the short term, does Tesla's assets cover its liabilities, right? And so while its current assets stand at 29 billion, its current liabilities stand at 21.4 billion, 45 billion. So in the short term, Tesla is very well poised to cover its liabilities, which is a good thing. So everything is figured out in the short term. Another way to look at it, look at how well the company is in the short term, is to look at the current ratio, quick ratio, and the cash ratio. Uh, the current ratio gives it's a ratio of current assets to current liabilities, and ideally you would want the ratio to be over 1, which in any other words means that the current assets will adequately cover current liabilities. But as you go down quick ratio and cash ratio, you're getting more conservative. So quick ratio is the current ratio minus inventory. It's current ratio removed. It's inventory removed from the current ratio, because uh, again, for a company, when you are considering inventory, the understanding is that this inventory will sell fast enough to generate cash and eventually cover short-term liabilities. So if you remove inventory from that, this gives you a little, it gives you a more conservative ratio. And so as I said, current ratio is 1.35 and quick ratio is 1.04. So we're good there. So even quick ratio, that is current ratio minus inventory, will cover current liabilities. So Tesla is good there. But when you come to cash ratio, right? What is cash ratio? Cash ratio is essentially cash and cash equivalents divided by current liabilities. So what we're essentially looking at is, will the cash and cash equivalents alone cover current liabilities? And in this case, obviously not, it is 0.84. If it was over 1, that means cash and cash equivalents alone would cover current liabilities. But again, I wouldn't be that concerned, because we are using a very conservative metric, and uh, it's obviously good if it is more than 1, but it's really not a bad thing if it's not more than 1. I generally tend to look at the quick ratio, and as long as the quick ratio is over 1, I'm good. If you look at other companies like Google, they all have uh, ratios much more than 2. But Tesla is a growing company, and they probably have a very efficient capital management system. So these numbers look good for now, right? And then let's go to the debt to equity ratio. And what the debt to equity ratio tells us is how 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 much of debt a company has taken in reference to its equity, right? So what I generally look at is, I look at the long-term debt, and then I use the ratio of long-term debt to equity. So Tesla has about 3.15 billion in debt, which is another, and they have also have other long-term liabilities of 3.84 billion. So in terms of long-term debt, this is not really that high. And if you also look at long-term liabilities to equity, that's about zero point 0.2, which is basically the long-term liabilities are just about 20% of equity. Uh, which is actually not bad, which is just not much of debt in Tesla. And obviously, when you look at any financial metric, you will have to look at that metric in comparison with other companies in the same industry. So we've just taken the Ford Motor Company, and Ford Motor Company has a debt to equity ratio of 1.94, which means the debt is almost 2 times that of equity. Uh, so what this says, in other words, is that Ford has taken a lot more debt than its equity. Now, a ratio of 2 is 1.94 or 2 is not really that bad, because generally in intensive industries like manufacturing, telecom, you generally tend to have a much more higher debt to equity ratio. And as long as the company is performing well in terms of operation, this is not a cause to concern. This becomes a cause of concern only when the company is struggling, and that's when debt becomes a huge issue. So Tesla is fairly good, fairly well poised in terms of debt. So that's that's a good win for the company right now. Having said that, taking a lot of debt is not essentially bad. Companies generally tend to take debt to expand a lot of their operations. So taking debt is not really bad. At the same time, having much less debt is not bad either. It's just how the company decides to manage its debt. It's essentially a management decision, I would say. Okay, now that we've quickly looked at the balance sheet, what we're going to do is let's look at what the profit and loss statement is like. So to look at the P&L, that is the income statement, let's just go and look at Tesla's 10K. That's for year ending 2021. I'm just going to go up and just going to give you an overview of this. So this was filed with the SEC, and it's for the fiscal year ended December 31st, 2021. So if you scroll down here, you will have you'll have financial statements and supplementary data, and that's where you will find Tesla's P&L. So this is Tesla's P&L, and as we see for 2021, Tesla made a profit of 53.82 billion, right? And and that's pretty good because if you look at it, Tesla made a revenue of 53.8 billion with a net, sorry, with a net income of 5.5 billion. Let's just find that here. There you go, 5.5 billion, right? And that's fairly good. So what Tesla also did was it invested about 4.8% of its revenue into R&D. And as you know, Tesla invests a lot in R&D, right? A lot of its R&D goes into battery, developing autonomous tech, AI and stuff like that. So a fairly good chunk is invested in R&D. And this revenue grew by a massive 70% from 2020. So 2020 they made about 32 billion, and now they're about close to 54 billion, right? So 53.82, I've just rounded it off to 54 billion. So this graph just gives you how Tesla's revenues have increased, and this looks very promising. And especially if you note from 2020 to 2021, they have had a huge jump. Okay, one more metric is return on equity, is how effectively equity holders are getting their returns, right? So what we've tried to do is ROE can be a very tricky item. Uh, I don't generally look at ROE in isolation. Rather, I use the DuPont analysis. What DuPont analysis does is it breaks down return on equity into three constituents. One is the profit margin, and one is the asset turnover, and one is the financial leverage. So basically, profit margin, as you know, is the net income divided by how much revenue it's made, and asset turnover is essentially uh, the revenue or sales divided by average total assets for the year, and financial leverage is essentially assets divided by equity, and the denominator is essentially cancelled. So let's just look at, I've just compared Tesla with Ford and General Motors. And Tesla has a fairly good profit margin of 10.25%, which is comparable to others. Ford has 13%, GM has close to 8%. Uh, it also has an asset turnover of 0.94, which is also very good. Ford and GM are comparable. And then the third thing is Tesla has a financial leverage of 2.18. As you see, Ford has 6.6. And why is it 6.6? That's because Ford has taken a lot of debt. And what you do is when you take a lot of debt, so basically, if you look at this calculation, it's basically assets divided by equity. And the more debt you take, the more your assets increase, and obviously the equity stays the same. So that kind of tends to inflate your financial leverage. Just because Tesla has lower debt, it's at 2.18. So at the end, Tesla has a return on equity of 21%, Ford has 45%, and GM has about 17%. The reason I said I don't look at a return on equity in isolation is because of this. You see this 45%, and that's been boosted by the 6.6 financial leverage that Ford has. So I'm very happy with Tesla's number of 21%. Um, in fact, its profit margin is fairly decent. Its asset turnover is what I like. It's how well the company is using its assets to generate revenue. That's what an asset turnover is. So that's best among all the three, and that's what contributes to ROE. So that's so on the ROE side, I'm fairly satisfied with how Tesla is performing. And as I've written, in Ford's case, the return on equity is more than twice that of Tesla, despite a lower asset turnover ratio. This is due to its high leverage. So keep that in mind when you look at return on equity as a metric. Let's go to return on assets, right? Again, return on assets is how well a company, basically it's net income over assets, average assets. And in terms of return on assets, Tesla is the highest at 10%. So the test, what this essentially says is Tesla is really making good use of these assets, right? So per dollar in assets, it's making quite a bit of uh, net income, right? So uh, it's 10%, and I'm fairly happy with it. So far, as we've seen, Tesla has done pretty well in comparison with its American peers such as Ford Motors and General Motors. Um, Lastly, let's come to the cash flow statement, right? So what does Tesla's cash flow look like? So Tesla generated about 11.5 billion in cash from its operations. Let's just go back to the 10K. Let's scroll down and let's just check it out. So if you go down, there you go, consolidated statements of cash flows in millions. So if you look at this, as you can see, it's 11,497 billion, which is about 11.5 billion. And this is what Tesla made in 2021. So there you go. Tesla made about 11.5 billion in 2021. And it invested about 6.5 billion in property, plant, and equipment. So if you go down here, if you look at purchases of property, plant and equipment, excluding finance leases net of sales, there you go, you get about 6.5 billion. That's a fairly good chunk, right? Uh, so yeah, so in total, Tesla has net about 70% of its operating cash flow in capital expenditures. And let's take a look at what other companies are doing. So I've quickly drawn a table here where I've compared percentage capex invested from operating cash flow. Um, so Tesla has invested about 70%. Ford has invested about 40%, and GM has invested about a lot more, right? So GM has invested a lot more than what its operating cash flow is. So it's very likely they have borrowed a lot of cash. I've not gone deep into GM's financial statements to look at why they've invested about 1.45 times their operating cash flow. I would suspect that they are investing heavily into EV infrastructure. That's just my guess, but you'll have to look at the cash flow statement, annual report for that. Um, and then I've also below I've also made a graph of Tesla's annual operating cash flow, right? And the reason I make these graphs is I just want to give you an idea of where Tesla stands in terms of Ford and General Motors, because this 11.5 billion in operating cash flow in itself may not say much if you're just trying to understand where Tesla is. So I've just put that in comparison with GM and Ford. So that's really not bad for a company that's competing against, for a company that's over a decade old. I don't know how old Tesla is, but I think it's 2 decades old. So less than 2 decades old. So for a company that's less than 2 decades old, it is competing against Ford and GM, which are very old and established manufacturers. So this is a fairly decent operating cash flow that Tesla is generating, right? And uh, lastly, so what does Tesla's sales look like? So obviously, what I have done is earlier on I mentioned that Tesla sold about close to a million. That's about 936,000 vehicles in 2021. What I've done is I've tried to no, what does that mean really? So I've tried to compare Tesla's vehicle sales with that of other companies. Uh, Obviously, not. This is just to give you an impression of how these how high how many vehicles these established players sell, right? So obviously, Volkswagen Group sells substantially higher vehicles than Tesla. That would be close to 8 million vehicles if you look at it. Um, so, but the true comparison here is, I wouldn't say a true comparison would be Tesla with all other vehicles. I would say a really fair comparison would be Tesla against EV sales of other vehicles right now. The reason I've showed you this graph is because as we speak, ICE engines, that is internal combustion engines, still is one of the most dominant sales, right? People still buy more of internal combustion engines than EVs, and that's why I wanted to give you this comparison. But if you go down a bit and if you look at EV sales in particular, what I've done is obviously no doubt here Tesla beats Volkswagen and Toyota. What I've done is, as you've probably known about the Prius, which is a hybrid vehicle. So in calculating Toyota's numbers, I've looked at just three, which is the battery electric vehicle, the plug-in hybrid electric vehicle, and the fuel cell EV. What I've uh, what I've excluded for Toyota is um, hybrid electric vehicles, right? So when you look at this comparison, uh, Tesla definitely beats its competition. But having said that, uh, the competition is catching up. VW is definitely investing a lot into EVs right now, specifically after the Dieselgate scandal when VW made a pivot to EVs. So how is the stock performing, right? So because that's the whole um, gist of why you would want to understand Tesla as a company. So basically, you want to understand how is the stock doing? Is it worth investing? Is it a company that I can invest in? Can I make money off of Tesla, right? So so obviously I've early on in the beginning I've explained how well Tesla has done in terms of stock. So obviously, from its peak in December, it's kind of dropped down a bit in March, and I would attribute that to like the very fast growth uh, in the last 2 years. So it had to come down at some point. And moreover, right now, uh, the market is volatile. There have been inflationary pressures and stuff like that. So uh, the stock market overall has dropped a bit. Okay, so getting back to how well the stock is performing, what I normally do is I also look at what the PE ratio is. What what a PE ratio gives us is it's a ratio of price per share and earnings per share. So price per share divided by earnings per share is the PE ratio, and what essentially tells us is how many times the stock is trading over its earnings. And if you look at Tesla with other um, other companies, Tesla has a PE ratio of over over 100, which in my opinion is fairly high. A P ratio of over 100 is not really a new thing. A lot of companies, I believe Netflix at some point had a P ratio much over 100. So it's not a new thing really, but it always makes me pause and think of, okay, is it really a good time to buy Tesla? Any company if the P ratio is over 100. P ratio can tell you two things, right? One is it can tell you if the company is overvalued, uh, and it can also tell you if what other investors think of this company. So generally, if they think that this company has great future potential, they don't mind paying a price 100 times its earnings. But but then again, as I said, as I've analyzed previously, I want to see everything in relation to others, right? So I look at Ford Motor Company, General Motors, Honda, Volkswagen Group, and Toyota, and these all have P ratios below 11. So it's my personal opinion, Tesla is very highly valued at this time. Obviously, there's a lot of Tesla is definitely a company that's worth investing in. They're at the forefront of battery technology. They're at the forefront of artificial intelligence, autonomous driving, robot taxis. But a P ratio of over 100 is something I would think twice about. Not to say it's not investable. So let's just go down and obviously I've explained here why I think oh, yeah, so one more thing I would want to point out is even if you look at, so a lot of people say Tesla is not really an automotive company, it's rather a technology company that happens to have a car where it implements its technology, right? So let's just take a pause and let's not compare Tesla with automotive companies. Let's compare it with technology companies that have interest in AI, autonomous driving. So let's look at Google, Apple, and Amazon, right? One of the big three tech companies. So even Google has a PE of 20.3, Apple has 24.3, even Amazon, that's one of the biggest, is at 55.6. So really, that's nowhere comparable to the 102.67 PE that Tesla has. So that's so I would pause there and think twice about, do I have to buy the stock right now, right? So lastly, what are the factors that affect the growth of the company? So let's say, where does Tesla stand right now, and let's see what works in favor of Tesla and what are the risks, right? So let's start with what works in favor of Tesla. So to start with, as we have analyzed so far, it has good financials, low debt, and it's a very well managed company so far. The second point being Tesla has a fairly relatively high vertical integration. What does vertical integration mean is the company controls a lot of its supply chain. So what this means is the company upstream the parts, the input, the parts that form part of the company are also made by Tesla, most of it at least. and the sales are also made by Tesla downstream, right? So a lot of other companies, they source parts from many different vendors. While this is not necessarily a bad thing, what happens is, during periods of crisis, if there are going to be shortage of parts, you're going to have a problem. As you have seen, there is a global semiconductor shortage right now because, owing to the pandemic, supply chains have been disrupted. So a lot of automakers had to pause manufacturing, um, and what essentially they experienced a lot of losses. So in some this is one of the risks of depending on vendors, right? And that's not necessarily a bad thing. People depend on vendors so they can focus on what they're doing best. So Tesla is fairly vertical integrated, and that removes it from many of the risks that other companies face, right? The third thing is Tesla is it's always looking to develop its AI capability. So basically, um, it's one of the leaders in autonomous driving, and according to Elon Musk, if I remember watching one of his interviews, he's claimed that it's got one of the best autonomous driving capabilities, and this gives it access to a lot of data through a lot of Tesla cars that is so valuable for the company, and uh, that allows the company to stay one step ahead of its competitors, right? Uh, One more point being, the EV market is growing, and it is growing at the expense of internal combustion engines. And obviously, the current fuel prices are not helping either. And a lot of the younger generation are pivoting towards electric cars. While the initial investment is high, I believe the cars pay you back over time. So EVs are definitely the future. Governments all over the world are looking at bringing in policies that will help make the shift from internal combustion engines to EV. So that obviously works in favor of Tesla and obviously the EV market as a whole, right? Lastly, uh, let's look at alternatives to EV. So obviously there's hydrogen fuel cell, and while there are certain hydrogen fuel cell vehicles, it's really not given a tough competition to battery electric vehicles that Tesla manufactures, right? And Tesla has also invested heavily in terms of battery technology because that's the core, right? That's what defines how far the car can go on a single charge. And one of the biggest deciding factors for people buying an electric vehicle is what the range is. And Tesla is constantly improving its range. So it has this partnership with Panasonic, and it's heavily invested in battery technology. So what are the risks for the company? So the risks mainly is in terms of competition. Obviously, GM is also looking to compete and bring a lot of vehicles. They're also developing a battery chemistry called Altium, and this is done in partnership with LG. Uh, VW Group, Volkswagen, uh, makes excellent electric vehicles, and especially after the Dieselgate scandal where they were caught cheating on diesel emissions. I believe the company has made this huge shift, a huge focus on um, EV technology, and Volkswagen is obviously a huge competitor, and they're doing very well in Europe. I'm not sure at this point of time if VW has beaten Tesla in terms of EV sales, but they're definitely a big competitor. Um, so obviously, in terms of autonomous technology, obviously Tesla, I would say, kind of pioneered it, but everyone else, other manufacturers, are surely catching up. Uh, Early on, I had mentioned that China is one of the biggest markets, right? In fact, I believe China is the biggest market for electric vehicles right now, and it's the same for Tesla as well, right? It's the second biggest market for Tesla outside of North America, and Obviously, there are other manufacturers such as GM that has a huge presence in China. So it's already sold about 2.9 million vehicles in total. So it already has this customer base and this it's an established company in China. And tomorrow, if it decides to sell EV vehicles, it already has this established brand base. So GM definitely can be a good big threat for Tesla in China. So obviously, uh, is Tesla a good stock to buy currently? And that's the biggest question, right? Do you want to put your hard-earned money into buying the stock? So I would say yes, it is a good stock to buy, but it's with a bit of cautions and patience. What I would say is, what I would do is I would wait and watch. I would look at Q2 results, and I would see how because right now the market is fairly volatile, and there's obviously inflation, and the Feds are dabbling with interest rates. Uh, so let's just I would just wait and watch if Tesla is how the stock is going to perform. It's just my opinion and my personal opinion alone is the stock may drop a little bit. Now, just because the stock is dropping, it doesn't mean that the company is not doing well. The company is definitely poised to do well in the long term. I believe the stock will drop because between 2020, the stock just shot up, right? Just shot up, and and I've not seen something shoot up so fast. So that's just my personal view. And that's why I say it is, but with a bit of caution and patience. What I also just wanted to quickly look at is between Q4 2021, let's just say 2021 and 2020 were the pandemic years, right? And Q4 2021 is maybe where things started recovering a bit in terms of the global economy and the pandemic was slowly subsiding. So say between Q4 2021 and Q1 2022, how uh, how sales have changed. Another good comparison would be between Q1 2022 and Q1 2021. Although I've not done that comparison because 2020 2021 was the pandemic year, and obviously it would give me much good numbers to show progress. But I would rather compare Q4 2021 with Q1 2022. So between this quarter and the last quarter, there was about 0.45% increase in vehicle sales, which resulted in and about 5.6% increase in automotive revenue. I've just used automotive revenue and not uh, automotive revenue, including storage and power generation. I've just used automotive revenue for now, which is 5.6% increase, which is fairly decent. However, the cash flow is decreased by 13.3%, and this is not a cause of concern because I would attribute it to some other pay. I would say maybe it is due to some payables commitment or something like that, or a delay in receivables. But I need to dig deep. I will not speculate on it right now. But this is not something I would be worried about. But but in terms of vehicle sales, this is not it's not a huge jump either, right? Um, And obviously, to conclude, I would say the current inflation and market volatility do introduce fluctuations in the market. In the short term, price of the stock may drop further. So I would wait till Q2 2022 to see uh, how the stocks perform before I invest. So I hope this gives you a brief overview of the company. Obviously, I have kept this video very raw because I wanted to run you through all the metrics of the company rather than just make a perfect rehearsed video. Um, I would suggest go through Tesla's 10K and the 10Q. Well, if you remove the hype of if you the hype or the idolation of Elon Musk, Tesla as a company is a very well managed company, and it's definitely uh, worth investing in.